This week on Captains of Industry, we speak to the man at the helm of one of the world's largest unhedged gold producers. Nick Holland was appointed as the CEO of Goldfields back in 2008. A qualified chartered accountant, Holland has been with the company since 1998. This is Captains of Industry. Nick, let's go back to the 1st of May 2008 when you took over as CEO of Goldfields. And unfortunately that day was change your attitude towards safety forever.
Very much so. I would say that was a defining moment in Goldfields' approach to safety. And first of all, let me say that our safety practices and standards were in place before that. But I felt that we needed to do a lot more on safety, and we had to change the view. And I wouldn't say it was a view that was expressed by everyone, but certainly by some people, that fatalities were part of the industry and it's one of those things, and let's get on. And I thought, no, we can't do that. We've got to do something very different. So it changed my whole attitude to safety, and very quickly that was the big focus of certainly the first year or so, and we did a lot of things differently over that period, and we had to make some very, very tough decisions.
Your predecessor, Ian Cockrell, was a geologist, and when you took over as CEO, there was some criticism that you are a finance man, an excellent finance man at that, but people were a little skeptical as to whether you had the operational experience needed to head up the world's fourth largest gold miner.
That's never really worried me. I know that there's people out there who possibly feel otherwise, but it's never stopped me at all in terms of thinking about the things I need to do, asking the questions that I need to ask. And at the end of the day, one has to remember that this business is all about the numbers, and it's all about money, and we have to structure our business to be safe and to be profitable. And whether you're a mining engineer, a geologist, or a finance guy running the organisation, I'm sure that all of us would have the same view on what we want to achieve.
How's your leadership style different to that of Ian Cockrell? I know the big focus is on those cash costs. You came out very strongly at the beginning saying that that would be a key focal point.
Well, I'm what you would call pretty hands-on. I like to understand what's going on in terms of the detail, but at the same time, I believe it's important to stand back. And I would say that there's a rigorous process that we go through to agree on our strategy, a rigorous process to agree on what the short-term targets are. But after that, it's up to the guys to go away and do it. And once we've had proper consultation about those targets, then it's a monitoring exercise. And as I often say to the guys, if things are going well, you're not going to see me. It's only if things aren't going so well that we need to get together and talk about things. I think you need to give people space to manage. So it's always going to be a balance between getting involved and standing back. And I think the structure we've put in place certainly has allowed people to do that. We've reduced our corporate office by 3 times compared to what it was, and that's not necessarily by putting people on the street, it's by putting people back into the businesses where the action is. I don't believe we're going to solve the problems here in this head office. We're going to solve the problems out in the operations. So that's really been my style, and also focusing on what is the value. And I've spent a lot of time talking to around about 100 fund managers in the first 3 to 6 months. Ask them, what are you looking for from a gold company?
And what do they say they're looking for? Because this is a debate I regularly have with these fund managers on the Business Tonight news desk.
Well, first of all, they're very concerned that gold equities have underperformed the gold price, which is true over the last 3 to 4 years. They're very concerned that despite the gold price going up, we don't seem to be making any more money, and that's not Goldfields alone, the industry at large.
The South African industry at large, or the broader industry?
The broader industry. Costs are going up everywhere. There's a misconception, of course, that costs go up in South Africa more than the rest of the world. In fact, we've done a lot of data, analysed a lot of data to show that's not the case. They're all going up a lot, the costs.
Well, the widely quoted stat is that cash costs in the international arena average around about $450 to $500 an ounce, whereas in South Africa, just looking at your cash cost for the third quarter, sitting at just over that $700 an ounce level. Does that tie in with the numbers and the stats you've got on the table? Or is that a misconception?
That's also a misconception because, you know, cash costs only tell part of the story. What you'll find is that a lot of companies will capitalize a lot of costs that possibly should be expensed. And I wouldn't say that there's conformity in how we treat certain things. And that's why I focus on total costs, what we call notional cash expenditure. We are the only company that reports notional cash expenditure, which
currently
is
sitting at about $1,000 an ounce,
which is operating costs plus capital expenditure. The industry at large is sitting between $800 and $900 per ounce. If you look at that, we were at $1,000 last quarter, but that was on the back of a much lower production quarter because of the Christmas break. I think if you go back, you've got to look at the trends over 6 months to a year. And if you look at 6 months to a year, we are in the 900 to 925 range. So we are, I would accept we're on the higher end of the band, but we're not outside the band.
Can you move? The question is then, I'm sure the fund managers put it to you, can you move to the lower end of the band in terms of those notional cash costs?
Oh, absolutely. And it comes down to improving our efficiencies. And if you look at this business and break out what the things that you can control and those that you can't, you'll find the gold price you can't control. Our costs we actually can't control in terms of energy, water, consumables like cement, timber, etc. So those two things are largely outside of your control. So all you're left with is to manage the efficiencies, how you mine, can you mine more productively, and then also your grade management and your portfolio mix. And if you can focus on all of those issues, you'll make a difference.
Let's pick up on a couple of those challenges for you, and starting with electricity. Obviously, we see now that Eskom has been granted this 25% increase in tariffs for the next 3 years, but you're in this business for the long term. You know, 10, 15 years out is what you're looking at. I'm sure the next 3 years is really short term for you. What are you expecting the long-term price curve for Eskom to look like?
Well, that's exactly the question I asked NERSA when I went and addressed the public hearings. We have to make 20-year decisions in this business. And what I asked for was a long-term price curve from Eskom. We don't have one. All we have is a 3-year curve. So I'm concerned about making 20-year decisions in South Africa when I don't have a long-term price curve, or for that matter, a long-term policy on what price determination is going to be on electricity. So that causes a major amount of problems for us in terms of forward planning. And
how do you overcome that? Because, I mean, it sounds impossible. You don't have the numbers at hand.
Well, we are going to have to be very circumspect about what we do in terms of further development until we know the situation. Obviously, South Deep will continue. You know, that's a fantastic mine which, even at continued higher electricity costs, will still be robust.
It's the largest gold deposit in the world. Does it still hold that accolade?
Oh, absolutely. The largest, and I would say the most prospective in terms of its value. But when it comes to doing other projects in the country, you know, we've looked at, for example, the potential to extract uranium from 14 slimes dams that have been built up over 50 years and have accumulated some 600 million tons. Frankly, it's going to be very difficult for me to recommend we proceed with the development of that project when I have the uncertainties around future power price increases. It's a good project, it's fairly robust, and remember, it's all been mined, it's on surface. So I'd like to take that project forward, but that is one of my main concerns, is not understanding the long-term price path. So we're going to continue to lobby on that.
When you took over as CEO, your production was pretty much 2/3 in South Africa, 1/3 offshore. And part of your strategy when you took over the company was to look at increasing your expansion into West Africa, into Australia, and into the Australasia region. Where are you now in terms of the balance of production?
We are now sitting around about 44% out of South Africa, external to South Africa, that is. So we've certainly moved up the curve, and that's been achieved by bringing Cerro Corona into full production in Peru, our first operating mine in South America. That's come about by doing an expansion of one of our large mines in Ghana. But where we are now is we have a number of brownfields projects. Brownfields is the potential to expand existing operations, both in Ghana and in Australia, and those projects are certainly gaining traction, and I would expect over the next 18 months to 2 years we'll see that mix moving closer to 50-50. Secondly, we've just made one of the most significant discoveries in South America, 5,000 meters up in the Andes in Peru. In fact, 2 weeks ago I was there in southern Peru, and that's a 5.5 million ounce deposit called Chuquipaca. We expect that to get a lot bigger when we do more exploration drilling. So I think that's got the potential.
South America is going to be huge in the life of goldfields, is what you're saying, bottom line.
Absolutely. South America is going to be huge. Cerro Corona itself, we have the potential to expand it significantly from where it is. And Peru in particular is a country we'd like to operate. So one of the subtle changes we made when I got in is not to change necessarily the overall growth strategy, which we'd formulated before, but to get it more focused in regions across the globe. And that was for two reasons. One, those regions also happen to correspond with significant geological endowment. And two, we already had a footprint there in terms of people, skills, and the best place to find gold is where you're currently mining. And that's why we've set these targets of 1 million ounces for Australasia, 1 million ounces for West Africa, 1 million ounces for South America. And it's not to say that we've got that pipeline full today, but it gives the guys an idea of what to shoot for.
International shareholders play a big role in Goldfields' database. Talk of nationalisation, Julius Malema and the noise that he's making on that front. Is it something that those fund managers pick up the telephone and say, Nick, what are the chances of nationalisation? How do you respond?
Well, certainly you're right. It is a concern of foreign shareholders, and they're not too sure where this is going. One of the things I've indicated is that I've spoken to the president of the country, I've spoken to the Minister of Minerals, and I've been assured that this is not something that is going to happen, and that I can go and tell our foreign shareholders accordingly. That's one view. The other view is if you stand back and you analyze where we are exactly. If we help to transform the industry and to change the representativity in particular of senior and middle management and make sure that the mines do more in the areas that they are in for communities, for our people, etc., I think we're going to diffuse a lot of these issues, because a lot of the pent-up anger that has been expressed about the mining industry is because of the legacy of the industry and some of the things in the past that weren't done as appropriately as they should have been. So I don't have an issue in drawing a line in the sand and saying, okay, that's happened, we can't change it, but what can we do going forward and improve it? And I think if we do that, we can help the government to deflect a lot of this criticism, and we can help the government to have answers to the likes of Julius Malema and address his particular concerns.
And we're not the only country looking at solutions for minerals that belong per se to a country. Looking at Australia and your exposure on the Australian front, given the fact that they're talking about tabling this 40% tax on super profits, on resource profits. Does that affect your strategy in Australia?
Well, certainly it does make investing in new projects in Australia more difficult. It raises the bar, and it certainly increases the political risk for that country. And the one interesting thing that comes out of it, it's actually quite ironic that foreign investors in places like Australia that I've been to will often say, well, you know, we're not going to invest any of our funds in South Africa because of political risk. Well, those same fund managers now have some problems back at home to sort out. So I think what it does do is it shows that we've probably bashed South Africa too much, that there's political risk elsewhere in the world. And frankly, this issue of increased taxes by government, increased imposts in various countries we operate in, it's happening all over the place.